What's up, guys? With Bitcoin looking so bullish lately, I know the FOMO can be real. It's very easy to feel like you're underexposed to the market in a bullish environment, okay? I want to show you a way that you can make money without FOMOing into the market, because I know the FOMO can get real. If you're feeling the FOMO, guys, tell me in the comments, because it's really easy to get that feeling, especially when you see prices increasing so much, all right? This is going to be an interesting one, guys. I've been having a lot of fun with this, so let's get right into it, all right? First, I want to show you the fear and greed, just because I want to actually reinforce the idea that everyone's greedy, all right? Everyone's greedy. The prices are going up, and this is where the FOMO comes from. So I want to actually give you a play that I love to do. I learned this in the last bull market. It is a play that has no real downside and only potential upside, right? And it's a super simple play. So the first thing you need to understand is we first need to understand how Bitcoin moves in a bullish environment, okay? So typically you see these aggressive runs that are like 30%, right? Over the last couple of weeks, we see a 30+% run here. Now, what happens as Bitcoin runs 30% plus, right? You eventually reach a consolidation period. That's just a period where people start to expect a pullback, which eventually we will get. Right? So as Bitcoin goes higher, you eventually expect a pullback. Some people think we're going to go higher. Some people think we're going to go lower. No one really knows. So then a couple of days play out, day, right? Where the market's starting to paint a picture, right? And as the days pass, we started to, in this scenario, have a accumulation phase that was an ascending flag, right? So you can see this ascending channel right here that started to play out as we waited to see what was going to happen. This typically is a bearish pattern, okay? This typically results in a move to the downside, a pretty aggressive move in the downside. Traders know this. So what traders end up doing when they see this pattern, they end up placing future shorts, right? They place bets on the price going down, which is actually quite intelligent, right? We went up by 30%. We're in a consolidation phase. We're in a pattern that's typically bearish. Probably should bet on the price going down. They bet on the price going down. But what can happen, like this scenario, is Bitcoin can remain strong. If we keep a strong Bitcoin, the actual shorts will get liquidated. That liquidation will lead to a large Bitcoin candle. Now, that's the first piece, all right? So now, these shorts were liquidated. Simultaneously, I want to show you the second piece to the puzzle. Simultaneously, during this liquidation here on the 9th, you also have, if we look at near protocol, but you can see this in many other altcoins. I'll give you an example later. You can also simultaneously see a liquidation in near protocol and in the altcoins, right? So you see a liquidation that leads to a huge price drop to the downside. This is because futures traders were expecting the price of altcoins to go up simultaneously with the price of Bitcoin to go down. So they actually placed shorts on Bitcoin because the price was up so much they thought people would take profits. So they tried to bet on that. They also placed the bet on the money moving from Bitcoin into the altcoins. They'll sell their Bitcoin for profit, move it into the altcoins. That's why you see this huge wick to the downside. That's because they placed longs, and the money did not move from Bitcoin to Bitcoin to the altcoins. More money actually went from the altcoins to Bitcoin because Bitcoin remained strong. What that caused was a cascading liquidation to the downside. So that's how you get this huge almost 20% wick down on their protocol. You can even go to AVAX and see the same thing, right? So you can see at the same simultaneous time, you see a roughly 15% drop in AVAX. Now, this is how we do the play, okay? Understand that when Bitcoin runs, there's going to be some type of consolidation. This is always true, okay? There are three types of consolidations that can happen, but neither one, it doesn't matter which one they are, but I want to give you some insight as to why you want to kind of know. So you can have a ascending flag consolidation, which is the one we got. You can have a horizontal consolidation, which is something like this. And you can have a descending flag consolidation, which is something like this. Now, when you have the descending consolidation, typically this is bullish and you get an aggressive move to the upside. Typically traders will place futures longs expecting the price to go up, right? And if they're wrong, we get a liquidation down. But in the case we see here, they actually expected the price to actually go down because we had this bearish movement here, right? And they also placed longs expecting the altcoins to go up because they expected the money to flow from Bitcoin to the altcoins. Now, all of that to say, this is the play. Anytime you see Bitcoin run, especially when you see this one, the ascending flag, you can always place, as soon as you see this consolidation play out over a couple of days after a run, you can say, oh, I'm starting to see ascending flag. Let me go place a buy order. Let me look at what my favorite altcoin is and let me place buy orders under 10%. Like, let me place 10% buy orders under my favorite altcoin's current price, right? And the buy order differs depending on the altcoin, right? So you have to pay attention. Let's pay attention to this, right? Near protocol dropped roughly 20%. It was 17 to 18%, right? AVAX only dropped 13 to 14%. So you have to be aware and do this. You have to use the same altcoin. Me personally, I use the same altcoin so that I know the percentage that it typically dumps when this pattern plays out, right? And this pattern plays out over and over and over the whole bull run, right? So this is something to get used to and watch happen as time continues, right? So me personally, I'm choosing near protocol. That's the one I'm going to use the entire bull run. At least right now, that's what I've chosen. That's what I like. I like the volatility and I like how much money I can make easily. So what I'm going to do is once I see Bitcoin run, I see a consolidation. It really doesn't matter in which order it is, which type of consolidation it is, but I really like to see the ascending flag because that leads to an aggressive drop, right? That leads to like some really aggressive volatility, and the descending flag also leads to aggressive volatility. Once I start to see the accumulation and I see my ascending flag, and I'm pretty sure that the traders are going to expect the downside movement, so they're going to place the shorts. And if they're wrong, I've now got a buy order. I'm now placing my buy order. As soon as I start to see this pattern playing out, I'm placing my buy order days earlier, and I'm 10% under the current price. So let's say we're here on November 8th. I'm placing my buy order. If I'm here, I'm saying, okay, let me go down 10%. Near protocol, I'm going to only do this in near protocol. I know I need to go down 10% because the pullback will be roughly 15% on average. And I'm going to be down here, all right? My buy order will be here. All I would do is go to Coinbase, guys. I'm doing it to a large crypto like Near. I'm going to Coinbase, my Coinbase app. I'm placing my buy order, and then I'm moving it day by day, right? As the price of Near changes, I'm just moving it. I'm staying 10% of the current price, 10%, 10%, 10%. And I'm waiting for this guy to play out. I'm waiting for this guy to eventually make a decision. Day 1, day 2, day 3, day 4, day 5. I can see the pattern playing out. Once I see the ascending flag, I place my buy order on that same day, 10% under the current price of Near, and I keep watching this pattern play out, and then I keep moving this based upon the price of Near. I keep it 10% under the current price, 10%, 10%, right? And let's say I did that starting here. I will be moving it up and 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 moving it around, and then finally one day, the wick would happen. The wick would happen, it would drop 10%, and let's see. Well, it would drop 20% roughly, but my buy order entry will be at 10%, right? So as soon as I get my buy, I didn't catch the bottom, but I caught a huge chunk, right? As soon as this wick happens, now I've got an entry at this price. I've got an entry at $1.35, and as you can see, now I'm going to get a bounce back, which I can trade if I wanted to, and I get a bounce back of 10%. So I've got a 10% bounce back trade that's guaranteed. Now I want to show you the risk, right? This is all that could actually happen, right? One scenario that could happen is the price actually drops. If the price actually drops, that means the money will actually go into the altcoins, which means the altcoin price would have went up. It would have went up, which means you just wouldn't have got your buy order. That's no risk. You just simply didn't get your huge buy order, right? So me personally, I would be DCAing and then have a huge buy order for this one because it's going to be guaranteed profits if it hits, right? That's how I would do that. The other scenario is that you can have a scenario where the price actually does what we got, right? They expect it to go down, but it went up. Then you get your buy order hit, you make profit. The other scenario that could happen is no real liquidation happens because you have like a sideways pattern like this, and there's no liquidation, and the price just creeps in either direction, right? So instead of seeing this do an aggressive up or down drop, it just continues to do a trading pattern, right? And it could creep down to your buy order and then keep creeping lower and lower and lower, right? So this one isn't risky either, because as you see the price creep down in a slow way, you're checking your buy order every day. You're checking your buy order every day. If the pattern changes, right, and it leads out of this pattern and it starts to just trade slowly, you just remove your buy order, guys. You don't keep your buy order. This buy order is here, so if you get the fast wick, then you can actually get the buy. But if it's starting to creep into a different direction, you don't just wait there and wait for the buy, guys. You only do this with the wick. You can just get rid of your buy order if it's not moving aggressively, guys. So with that being said, guys, that's the whole play, all right? Hopefully that made sense. I make a lot of money with this pattern. I did it a lot during the last bull run. I'm starting back now. Whenever I do this pattern, I'll try to update you all. I typically don't do it to trade, though. I typically do it to actually get buys as we go up. As we move forward into a bullish environment, I try to use it to get buys and not buy all green and not FOMO into the aggressive runs and the greed, okay? So with that being said, guys, let me know if that was useful. This is a way I make money and prevent the FOMO. With that being said, guys, I'll see you in the next video. Peace.